Hey everybody, Preston Bryn here with our Trader User Group Weekly Roundup. This is for the week ending June 27th, 2014. It's been a very quiet week. Next week's going to be another very quiet week, and it's also going to be a short trading week because we're going in July the 4th holidays. The markets are going to be closed 1 p.m. Eastern Time on Thursday, all day on Friday in U.S. markets, so that's going to make it for a very slow trading week. Very similar to this week. What I've got on the screen here is the SPX Cash Index, S&P 500. I've got a monthly chart up here, so let's just kind of take a step back and just kind of recalibrate where we are, where we could go. And then I suspect what we're going to see is very similar next week, as I said, to this week. Very quiet. You can see here I've got a couple things on the screen that I wanted to just show you. I've got a pivot low and a pivot high on this monthly chart. This low, of course, was March 2009, and then the high just before the crash right here in late summer 2007. And plotting that, this gave us some fib extensions off of this pivot low and this pivot high up here like this. Now, what we're finding and what I'm finding is that we're moving up very nicely in kind of a grind mode, and that has now created some key support and resistance points where we can expect more resistance and or support depending on the nature of how we're going to approach that price level. I've also got a little minor Fibonacci extension off prior pivot lows and highs using a day chart. We'll look at that in just 1 minute. You can see here, however, on this monthly chart where in plotting these extension points, we've got a couple of key levels here from 1916 to 2022. I would say on a longer term basis, 2022 could be a key resistance point for us. It's 50% of a fib extension, as I said, off this pivot high and pivot low over here on the left hand side of the chart. Now, if we zoom in here and let's just come into a daily so that you guys can get a general idea of how these numbers work out here. And I blow it up a little bit. I did the exact same thing on the daily. I created another Fibonacci extension off pivot high and pivot low. You can see here off this daily, I use that pivot low and that pivot high there, a very short time frame. And that gave us these extensions right here that you can see on the screen. And we are running fairly, and you can see these extensions, have provided support and resistance as we've come through this area. Clearly, we've kind of held this thing up remarkably well. On the daily, you can see 1981.93. Now, we are in an up mode on the way we trade. Our daily bias for the SPX is clearly in the up, and would not surprise me to see us challenge this area and then back off a little bit more back down to this 1949 number. Not sure if we'll get up there. We got to take out the prior high, but that's kind of how I'm looking at this right now. If we look at the E-mini futures, and I've got a lot more action on the screen here, but let me just blow this up so that you guys can just see what we're following here in our chat room. Again, this is a daily chart. But you can see in this area right here, the 1960 is the all-time high, intraday high rather, on the E-minis. And we've had this low and a higher low there, and then we had a high, and then of course this higher high. So we're moving in the right direction. And this upsloping trend line right here is going to act as kind of a little support mechanism for us. But again, off the prior low and prior pivot high, I've got these Fibonacci support and or resistance lines. We've sat from this one right here to this one right here. We've been in this for almost a week. You could see the open and close right in this area here, and we finally punched through today on very light volume. Would not surprise me, as I said, to take out this high right here and then roll back over and then find ourselves back down in this area again, right down in this area here. We're extended a pretty good bit from the 50 EMA, which is sitting right there at roughly 1910. So we've got a really nice, healthy extension, and some may say probably a little bit too healthy, because if we look at the 200 EMA, it's sitting at 1818. So we are clearly in this nice up mode. Now, if I were to plot from this pivot high, my system also calculates a resistance point right there, which is exactly where we came to. So and then we had this drawdown right here, which created this upslope and trend line. So this right here, 1936, let's call it 1936. That's going to be a key pivot for us. We want that 1936 to hold. If this holds, and then we're going to continue to make new highs like that, and we'll run up something like this as long as we don't take that out. If we take this 1936 out, then this is the next pivot that could be something that we need to follow very closely. So net in a very quiet markets, price action tends to grind within a tight range. Volatility tends to stay low, and the net result is a little bit of a grind higher. I would not be surprised to see the same type of trading venue next week. However, and I told our members in one of our pre-market sessions yesterday and then Sunday night, we've had continued revisions to the downside in Q1 GDP. Now, all the markets are just throwing that off as bad weather. And most of the market analysts, as well as the big money players, are assuming and making the anticipation that we're going to have a strong Q2 and 3 and then a strong finish to the year. Certainly Q2 and Q3. So they've got this priced into the current markets right now. We're going to get our preliminary print on Q2 in about the second week of July. Somewhere about mid-July, we're going to get a Q2 print. If that's not what the expectations are and that falters, we're going to get our 5 to 10% pullback. If it is, then because it's basically priced in, we'll continue this grind higher. Now, nobody knows what it's going to be, but that's kind of where we're seeing this thing right now. So I think things are going to be relatively calm until we get that print, at least here in the U.S. markets. If we look at the Russell, and let's look at the Russell futures, we had a nice little day today. It moved up 6 points. We've had this shift in trend, as I've talked about many, many times before. You've got the lower lows coming down here, and then and lower highs, and then we took out that prior pivot high right there with this pivot high right there. So that started the change, and then we had another higher low right there, and then we took out that high like that. So now we've done pretty much what we did in NASDAQ, where we're now making higher lows and higher highs. So we had this transition here. Now, I call this out for you guys that are watching this. I said, this is what, if it happens, we're going to have a race up here fairly quick. So, and that means the Russell futures are going to move stronger and faster than both E-minis and the Dow futures. One of the things that we've been trading as a small cap 3X bull, we've had a lot of fun with that one. And we're trading volatility too, so we're having fun with that as well. And for those of you that are not members of our group, I highly encourage you to come on in and give us try us out. If you want to just kind of see how we're doing, check out the monthly membership, and then you can upgrade to an annual, or you can stay monthly. But I would encourage you to take a look at that. But this is where we're sitting right now. Volatility is still very, very low. I mean, look at this chart here of vol. If I blow this up, you can see vol is below this shaded area down here, which is kind of like where we've been for 2 or 3 years. Actually, it's kind of served as resistance, or I'm sorry, support for us. But now that we have taken out this area and we're down in this area here, now we're down to 2007 low vol areas. Again, I'll say it again, the odds favor vol to go in this direction and revert more towards a higher mean. But right now we're sitting down in this area right here. For options traders, it's a very tough, hard way to play. Really, you can play low vol trades where you're not taking a directional bias, you're just buying straddles. That's one way to go, and there are a couple of other things that you can do as well in this. But that's where volatility is sitting. The other thing that we were looking at is in bonds. You know, in the bond market, as I said up here, in this area here, we'd love to look at shorts. Now, we had a reversal today in bonds. I believe over a period of time, and I don't know how soon it's going to be, we're going to find bonds back in this level, somewhere in this area right here. I just don't see bonds sustaining themselves up in this level. I did talk about bonds having this, you know, little move like that, and it could do one of these things and have a final capitulation up here, almost like a little cup and saucer pattern. Right now we're sitting right here, so you know, we could come down and find support at the 136.10, move up, and then do one of these kind of numbers like this, and then boom, then it gives it all up. I'm not really sure just yet. Bonds, it's a little bit difficult to trade because we've got a lot of money floating around from central banks around the world. And it's not just the U.S. playing the U.S. bond market. You've got Europe coming into the bond market because a lot of the bonds in the central governments all across Europe, especially in the ECB, are very, very low because of ECB guarantees. So, you know, it's almost like some of the rates, like 10-year and Spanish bonds and Italian bonds, are actually at or slightly below the 10-year U.S. So the risk is less to be in the U.S. bonds instead of Italian or Spanish bonds. So money is going to seek a higher level of yield for a lower level of risk, and that's kind of part of the trade, which has kind of helped push bonds up. But that's kind of where we're sitting right now across these sectors. We've also had a lot of fun playing the euro. Now the euro is getting a little bit of a bounce here, as we talked about, but we've been short the euro. As you can see, we're sitting just slightly above the 200 EMA. For those of our members, we got in way back over in this area here. It was a really nice trade for us. We moved down nice in the euro. Now British pound, we've been bullish the pound for quite some time. The pound is coming right up to this level, the 1.7043 area. I think eventually it's going to break through, but we've had a number of entry points that our members have been able to take advantage of for those that like to trade the pound. The Japanese yen, speaking of currencies, is on the higher end of this curve here, but my bias overall in the yen is more towards the downside. If the yen breaks out to the upside, then that'll be more bearish the Nikkei and more bearish the U.S. markets. So we got to keep an eye on that, although I do believe the odds do favor. From this position right here, I think the odds favor the yen to come back over like this. And search out the bottom of this tight trading area here. I think eventually this area is going to break, and we're going to challenge that area down there in the yen. So that's a little bit about how I see the currencies. Gold, I'm talking about with our members here. I like the possibilities of gold in 2014 to the long side. Most of you guys know I had directed and I took a trade over in this area, gold to the upside. We had a nice move here right in this area here. We got out. I've been out gold for a while, but we may come back in and challenge this area a little bit longer term in 2014. I think inflation is starting to come back into the market, so we're gonna check that out. I think there's going to be some good areas here, good opportunities. Right now I'm watching gold. I want to make sure that it can hold the 200 EMA. The other thing with gold, we've got this nice, forget it's a flag pattern, a bull flag, which means the break is more likely to be the upside rather than the downside. So that's kind of where we're sitting with gold. Oil is a little bit of a sellout. There's a fear premium in oil based on the issue in Iraq. Is that if that calms down, which I suspect it will in a bit, oil is going to come back down and trade basically inside this range here. And then we'll get a little bit of chop, but I think oil is more geared to be up in this area here than down in this area here. So we could just kind of say right now I'm not gonna play this to the long side. Although when we do get up in this area, I do favor credit spreads in oil. I work with our members on how we can do those and put them to our advantage. We haven't been in agriculture in a while. In the meat market, there are some good opportunities starting to shape up in meats, and they're not quite ready yet. We got them on the grill, but they're not ready to be pulled off yet. They're still rare, but they're starting to cook. So we're gonna capture those. Coffee had another nice little capitulation move today. You can see this big move back down. So sellers just stepped in and whacked it down. We traded this to the downside, did very well in coffee, and then we got out down at the bottoms down here, pretty well timed. And then we had that counter trend move up, as you can see here, in a traditional Elliott wave kind of pattern here. You know, you've got your 3, we had a true 4, and we're going to look for our 5 somewhere down in this area here on that fib area there. So that's kind of where I'm looking at with coffee. We got a number of sectors that seem to be starting to pick up as we go into the summer, going into the end of the year. I'm gonna keep this a very brief update. We're not gonna do an update next weekend. It's gonna be July the 4th weekend, so there will not be a weekly roundup for next weekend. Again, if you're not a member, I highly encourage you to check out this link here in the video, and it'll take you over to our monthly membership option. Go on and sign up. I think you'll be glad you did. We're having a lot of fun in the markets in 2014, as we did in 2013, 2012, 2011, 2010, all the way through 2008. We've had a lot of fun, and I hope you can participate. All right, everybody, our members, I'll see you this Sunday night in our Secret Trader session Sunday evening, looking at the short trading week coming up this next week. Otherwise, everybody have a great weekend, and I'll see you members Sunday night. Bye now.